It's a pleasure to be here. I just wanted to do a quick introduction of the panelists. We have Seb from Interop Ventures, Simão from Lightshift, Dr. Stephen Waterhouse from Nazaré, and Peter Pan from 1KX. So we can jump right into it. There's evidence that we are in an unusual environment, that this is not a typical business cycle. The unit of analysis for measuring the rate of returns on investments is changing, and that's called for rethinking investing. There's historical trends that are being permanently changed by mega forces like AI and meme markets that are fundamentally changing the economies. And I just wanted to open up the question, what investments and what opportunities are you seeing in Web3 that is leading towards some of these changes and transforming these economies? And we'll start with Seb.
Well, I think that crypto is, I mean, the product of crypto, the point of crypto is what crypto produces is tokens. And it is an industry of like producing tokens. And what we do with those tokens is primarily seen through DeFi. We have like protocols that we use to trade those tokens, swap them, lend against them, and do all these like financial things with them. And I think that that's going to continue to be true. That has been true for basically as long as crypto has been around. One of the first applications that I used when I started using Bitcoin and these very early tokens, even before Ethereum, was Shapeshift. Like even that was a primitive version of what DeFi is today. So I think that's going to continue to be the case. Now, like if you see that as the base layer, I think that's the truth. Then what's changing, I think what you're alluding to is sort of the way we interact with those and the systems that allow us to make better decisions around which of the tokens we want to hold. And that's going to create a pretty significant shift in terms of like how users interact with these tokens, primarily through the lens of making better decisions about like which tokens to hold. It also means that there's a lot more tokens. I really anticipate that in the next couple of years we're going to see a 3 to 5x order of magnitude number of tokens on one Bitcoin, and that's going to make it much harder for like individuals to pick out which ones they want to buy. But at the same time, like, the AI tools are also going to help make better decisions around which tokens to hold. So as AI and these technologies that you're alluding to create like a vast amount of new information and new tokens, at the same time, that same technology is going to allow people to make better decisions. And so we've talked a lot about this here at this conference, AI agents, etc., that simplify the UX, but also simplify the investment decisions.
Yeah, and Dr. Waterhouse says we're talking about AI. The same way that the internet allowed for new types of businesses to be invented and evolved that were not possible prior to this technology. How do you see this? How do you see AI changing this from an investor's perspective as well? And what type of investments do you see coming from this new models?
Is on?
Yeah.
I think AI just generates a lot of chaos initially. Like to your point, I don't think it's like 5 times as many tokens. I think it's like 500 times as many tokens. You're going to see like huge amounts of content be generated, almost to the point where social media becomes unusable. Tokens just generated left, right, and center every day, something new, things mimetic. And some guy I met, he's like, nothing to do with crypto. He's like, oh yeah, I just bought this LLM token. He's like, I'm up like from 2K to 40K. What I should do is like sell it immediately, because next week or even tomorrow or till the next day it's gonna be dead. So there's like extreme mimetic behavior that we saw originally with MITs, like Peter did a lot of work in this area early on. It's like now moved and being kind of accentuated and accelerated by these automatic tools. So I say it's like this whole year is just chaotic in terms of like the long tail tokens. This long tail tokens get longer and longer and longer. And yeah, things get better a little bit in terms of tools that like to like figure things out, but it's not like you can sit around and hold some random token. It's gone before you know it. And the amount of time you hear about it, it's too high, or you should be waiting this stuff. There's like I think a lot of chaos for the retail guy. So I'm looking at the way I looked at crypto for a long time now is like, when do we get out of like this room? When do we get out of like this little bubble that we're in? Of our own sort of like self-referential system.
Only when VCs lose billions of dollars pouring the money into it.
Sure, possibly. Or is it when we start getting systems that extend beyond just financial use cases? So gaming was one of the mechanisms that we talked about for the last cycle. Is that coming through this year? I hope it is. I think the crypto extending itself, not just like crypto agents with AI, but actually taking crypto primitives and applying them to broader AI systems and vice versa. That's when I think this stuff is really interesting. So those are some of the things that I've been looking at this one.
Yeah, and Peter, on that note, in regards to consumer crypto, and what do you see?
You already lose billions of dollars.
Yeah, no, like I guess the thing I would interject is like, are things different? I mean, everyone's running around like a headless chicken, for this past year and likely to continue, or basically lighting the money very publicly, on the internet. This feels like standard typical sort of fair weather for crypto. And I think it's just part of a broader trend of what crypto is. Crypto is bigger than any single meta or narrative. It's bringing absolutely everything in existence on chain, and it's the internet capital markets for the entire world, right? And the entire internet. And what used to be, just a bunch of people in suits that used to express their opinions on the market, you now have absolutely everyone doing so too, right? So you have the expression of normies, you have the expression of AI mad scientists that are experimenting with open source, right? And you have absolutely everyone in between, and I think that is the chaos that everyone's pointing to. But to me, this is at least, it feels like it just feels like crypto, right?
Just with more volume, with more people,
Absolutely.
chaos is at a different state. Right?
That's right.
Chaos systems are small, but once it gets big enough, like the chaos is a completely different level.
It's a reflection of the internet. The internet is chaos. Nothing is stable or persistent on the internet. Everything changes, right? It's always in constant motion, and so I think it's starting to crypto's starting to work. It's starting to mirror the internet, and the very nature of reality of information, right? Attention.
I like what you're saying, and I think one of the things that tie back to meme coins is that like crypto is the financial representation of cultural value of a thing. And like up until now, it's been a bunch of nerds geeking out about really cool tech and like CK and all this, sort of interoperability and fast block times, etc. But every time the sort of part of the cycle comes along where retail starts getting excited about it, it shifts into like this non-referential cultural thing, which is cute pictures of whatever, and penguins, farts, whatever, and I think that is the purest kind of representation of what crypto is. It's just like, how do we put a dollar amount, or how do we put a financial value on some kind of mimetic thing, some kind of cultural zeitgeist thing?
I think meme coins are the most honest thing we've ever done in crypto. Because like, no one's pretending that they're building a project behind it. No one's pretending that they're like doing something else. They're just saying it's a meme. Like, I'm not promising anything. It's just a meme. Buy it or don't buy it. Up to you. It's like very honest. So there's like this pure like expression of intent, meme, like whatever it is. Like just they're controversial, but they're very honest.
I would mostly agree in the sense that we're not pretending to be infrastructure projects in the future, right? But most of them are, I would say, run by insider cabals that own majority of ownership.
You know you're being rugged. You know you're going to get rugged.
Yeah, I think maybe not to maybe to crypto natives, right? That everyone sort of understands this like policy. I would say so. I mean,
Who's not crypto native that's using Uniswap?
Uniswap. Who uses Uniswap at all? I mean, mostly a lot of teenagers actually. I mean, if you ever scroll to if you ever find out like who's buying,
It is those rewards.
I mean, I think this is the first cycle in which like teens have actually entered crypto quietly without any of the crypto natives watching. Scroll to the last page of long-tail Solana entities, you'll find like 1 million Miladies derivative projects, right, on Solana, and you're like, who's buying and selling this, and who made this? And you quietly realize that you do enough digging, you realize it's just kids, teenagers, 19-year-olds, 20-year-olds who trading one sold in and out and writing in their trading diaries that they don't about how if you want to be long-term amount of position, you hold something for more than a couple minutes at a time, and you may just hold it for more than a day, right? And so that's kind of like the state of. So I think there's degrees of which that's true or false, right? But I think that I don't know what I'm getting with this, but I think it's like a representation, like attribution to the chaos. It's that this force at play that even many of us aren't even aware of, perhaps.
Well, I mean, speaking of the chaos, it even feels like it's getting more, it's intensifying, and so the memes are getting more extreme. And in 2017, I think we had one, which was Doge, and then in 2021 we had maybe 100 dog tokens. And now say that there's literally millions. And if this is where the trends are going in crypto, at least in the short term, maybe in the long term, how do you think, Simão, how do you think about valuing this and pricing this in, and how does this fit into a strategy for investing into this space?
Yeah, I think for us it's all just a distraction. Really, we really don't try to engage in those type of trades. Let's say. Actually, I think one of the core theses that we have for this year is the growth of security tokens. I think it's something that we spoke about like I don't know, maybe 5 years ago or more, but that are definitely coming back now. I think we can all debate about like the administration that we have, whether we're going to have like a Bitcoin reserve, whether we're going to have like someone replacing Powell and interest rates coming down or not. But I think something that we can all agree with is that what we have is a very pro-tech government, pro-crypto, and with that we're going to need like a ton of regulatory clarity. And precisely because we have a bunch of memes and a bunch of tokens that no one knows how to value, what we have is like a few guys that are finally generating a bunch of money. And this is real. Like this is a real economy that is growing. We have a handful of them, maybe 10, maybe 15, 20 or whatever. And then you have like everything else that all the traders are engaging with. And so we actually believe that the main way for these projects to differentiate over the coming year and the next ones are to actually show them the money, show them what they're doing, what they're producing, and the way to do that is to almost like having a token that is valued to the market, what institutions know that they like to trade and to invest in. And so we believe that that's already happening. I think most people don't know about like projects like DYDX that are pretty much already a security under the hood. But I think this year we're likely going to see a fizz switch in Uniswap or projects like Aave coming up with it, the Lightshift makers, so on and so forth, so they can really differentiate.
Arbitrum is actually turning on the fee switch this year, I believe. Yeah, as well.
Yeah. So very hard to say how to value all these memes. I think like behind every bubble there's like a lot of truth, and there's a lot of truth to human behavior. But how to actually distinguish them and put a thesis behind them, I think that's incredibly hard. But yeah, super bullish about some of these big protocols. They're already making a ton of money.
But I think we're talking about like two different types of tokens here, and maybe more of a spectrum than clearly defined things. But there are things that are clearly more like on the mimetic side, and things that are like DYDX that generate revenue. And like I always say, like Bitcoin is the ultimate meme coin. Like it is the godfather of meme coins, and it doesn't generate any revenue. It's just something that people hold, and there's going to be other ones like that. Like I mean, like I think ETH perhaps sits further on the spectrum of like having actual utility. But like as investors, especially those of us that have LPs, I think we all do here. Our goal is to like generate lasting returns for our LPs, and like figuring out what is the right portfolio allocation to like have investments in businesses that are going to make money, but in a way that like is risk.
They're going to make money or go up in value.
Sorry?
They're going to make money or go up in value.
Well, that are going to return DPI for investors, right? And like having allocations in things that are more on the risky side and perhaps like more on the mimetic side, I think makes sense. But again, what kind of fund are you? Like, are you sort of like fully aligned with trying to invest in businesses that are going to make money and maybe return like 20%, or are you like looking to return money?
But in order to do that, wouldn't we all be just high-frequency traders? Peter was saying like holding it for 2 minutes maybe, and trading a lot of times a day, or are we actually like?
I mean, I suck at trading, so I wouldn't get high-frequency trading.
There's definitely like nuance here, right? So on the mimetic side, I totally agree with Simão in the sense that yeah, these things would come and go, and it's hard to park permanent capital, right? But when you look at what meme coins are, it's a game of attention. It's really hard to sustain that attention, right? And majority of meme coins are just run by insiders who have zero accountability or vesting, right? Whereas there are, other tokens that may not be as purely organically grown and pumped at fund, right? That are playing the very same game. Like a great example is Pudgy Penguins. It's got a team that's vested in pushing that forward as a piece of IP. There's other brands in the space doing very much the same, right? So they're playing the same game, but not as a 100% fully circulating meme coin on day one, right? So I think we're yet to see some more nuance emerge here, but I do think it highlights a different type of game that can be played, right? And obviously on the fundamental side, let's say with traditional metrics such as revenue and fees, right? Yeah, like people may not. What's exciting on that side is not slow 5% burn per year, but fast month-over-month revenue growth. I think you're going to see exciting when it's that. But I think the game for investors nowadays is really to identify it's not about venture or liquid. It's about what sort of games are you playing, right? And what sort of value crawl and attention games are you investing in, right? What edge do you have, right? And as a founder too, right? Similarly, what game are you playing as well, right? Are you great at building attention? Like let's say on the consumer side, are you a founder that that is building something that yeah, like I guess I think it really like you have to identify what game you're playing.
So I just wanted to switch it up here as well, not just talk about memes this whole time, but I'm also curious, what is your contrarian opinion for 2025 when it comes to investing in the crypto markets? And we can start with Stephen, if you want to kick it off.
Did we just do this?
Contrarian opinion. I think, well, I'm not sure this is contrarian, but I think we'll see a pretty large correction in the AI market before the end of the year, like a global AI market. And that'll lead eventually to the adoption of like more open source software and commodity hardware, and away from the standard high-end video chips. So most people think this stuff just goes up forever, but I just don't think that's going to happen. I think eventually this can catch the cold. And one of the big AI companies in the software space will end.
Black Swan event?
Yeah.
I guess everyone's talking about how the markets are changing. I think they're exactly the same. You know, it's frothy, it's a bull market, people have risk on, so everyone's making up their favorite theories and what's going on. But, you know, things get scary, people stop deploying, they sell, and the only ones that will be deploying are people with any conviction and a thesis, right? When, you know, and I think that is against the popular sentiment, right? Which is today, which is, you know, thesis doesn't matter, going into conviction, investing in long-term projects and tokens don't matter. You know, I think like all of this is just like very much just this mid-market fluff.
Simão?
Yeah, so I would actually focus a bit more like on the institutional adoption side of things. I think we're finally going to see like a big CBDC by a country, and that's when things are going to change. I think that's when someone like outside of crypto is going to bring like a lot of wallets. It's going to force like a lot of wallets. Probably will not be able to interact with most of the applications that we have. It's going to be almost like a permissioned model rather than a permissionless and completely open. But I think that's going to onboard like a lot of people. And I think we need almost like a trigger of those. Like we're like in 2025, but the truth is that a lot of people got onboarded to tech in general with COVID, right? And you know, we have computers for many, many decades and all that. I think we're going to need something like that. I think there are a few countries that are already a few steps ahead than most people know. And so I would say that's going to be a big one. The other one, I think it was one of the major events besides ETFs and all of that and institutional players coming in, was the acquisition of Bridge by Stripe. I think this year we may be like a big acquisition by a TradFi company. Like someone like a bank or a big institution that wants to get into digital assets and will most likely buy, you know, one of those companies that we all know that may IPO, but I think they're going to struggle to IPO and they're going to need to exit. And I think that's going to be like the first acquisition, and everyone's going to be like, okay, this is coming.
I don't know if this is contrarian, but so I love a good comeback story, and I think that over the last year or so, people have been pretty bearish on, app chains and sort of like the Cosmos ecosystem generally. I think that it's going to make a huge comeback. Primarily because a lot of frontier infrastructure is being built using that stack or parts of that stack. So whether that's Babylon, Mantra, BYDX, and a whole bunch of other chains that are like Celestia, etc., that are building really frontier infrastructure or using Cosmos. And also that aligns with like recent changes in the ecosystem, like the ICF acquiring Skip and bringing all of the business development, technology development in-house. I think we're going to see a lot of interest in that space and frontier applications being built using that stack.
Yeah, so I think also to that point, it seems we all have our favorite L1s or L2s or chains, and this creates some severe fragmentation in the market in terms of priorities and gangs and identities and liquidity as well. And what are your thoughts here on this hurdle and how we can move beyond that? Because I think in the past historically we've tried bridges. They've been insecure, they've been vulnerable, but the fragmentation of liquidity seems to be a current blocker from getting things moving.
Yeah, I think it's. I don't know what the solution is, but I think it's missing the point. We were actually talking about this last night at dinner, and I think as an industry, there have been these tribes that have emerged within the space when we're all building towards the same thing. I mean, what we're trying to disrupt here as an industry is the inefficiency of existing bureaucracies, business structure, government structure, etc. And the marginal differences in the technology, different technologies that we're building doesn't really make that much of a difference. in the long term, if what we're trying to do is like disrupt governments or disrupt the way companies are run, like the inefficiencies of banks and the traditional financial system. And so I don't know how we get past these kind of tribal feuds within the industry, but I think the fact that we realize that
fight
we
each
all have
other?
the same goal.
Isn't it just fighting? Isn't that the new thing? The cage fighting?
Yeah, that's the way to get through it.
So the tribalism exists while there's effectively not many chains with many users on them, right? And I do think that one of the big stories and narratives that will emerge further and further is that you're sort of a chump if you're still investing in networks from a tech-first perspective, and that we're starting to see increasingly more application builders with critical mass of users and a top of funnel for onboarding launch their own chains, right? And we're already starting to see some initial examples of arguably look at Base. They were a central exchange first and then executed on their own layer 2. Look at Axie Infinity. They leveraged the growth of their application and launched Ronin. You're looking at Pudgy, launch your own chain Abstract, and so on, Azuki, Anime Chain, etc. And I think there's like many other examples here, right? Even Telegram with Ton. And as the number of networks proliferate, I do think tribalism is maybe always going to be there, but it's going to be I do see it being driven far more by actual traction and actual fundamental adoption. But the question is how are chain ecosystem teams ever going to compete against ones that actually grown and gone to market for applications when you've never done so before, right? And I do see that as like a big flippening.
This platform versus application play, right? So you go way back to things like Microsoft, the emergence of DOS. DOS comes along, and the reason that Microsoft succeeded is not because DOS was this great platform and everyone was like, oh, we should buy into this platform, like we'll build things on it. It's because of spreadsheets, because of Lotus, and then Microsoft Word. And these things became such powerful applications that everyone just bought these computers with this DOS on there, and then from there you could build other applications on the platform. Whereas to your point, it's like you build a platform first, and everyone's like, okay, so where's the application? It's like, well, we're waiting for someone to build this great application. It's like, well, if you knew what the application was, you should just build that application, because that's going to be more valuable than the platform. So first thing, build the application, and then from there you can build the application, the platform. Now, that doesn't mean that something like Ethereum isn't actually the same thing. Ethereum's first application was ITOs. Second application, DeFi. Bitcoin's first application, Bitcoin. Like all Bitcoin. So these things actually had applications, we just don't necessarily appreciate that they have applications from the beginning. Solana's first application was like, I don't know, memes. No, it's just memes. And you touch the Solana founder, they're just like, yeah, just start memes. That's what we do.
Yeah, I would actually add that I think it's pretty much like this interoperability game is pretty much overrated in the short term.
Completely agree.
It's very, very overrated. It's underrated in the long term, and I mean, we've made a ton of investments in interoperability because we believe the ecosystem will keep on growing. We're going to have more chains with more applications, and then further along the way, we're going to need to communicate. But for now, I don't think we have actually many examples in which we really wanted to do things in our chains or applications that cannot do partnerships with applications somewhere else. And so I think, to Seb's point, I think it's a lot more about technology. And the only reason we talk about this much is mostly because about VCs. Never in the past, if we were to build on Mac OS or on Android related or something related to Microsoft or whatever, we could actually have these wars and these conversations, right? We're just, okay, what's the best place for me? Where are my users? Let me build that. And the truth is that nowadays, if we want to build an app, it pretty much looks like a Web2 experience. If we want to communicate, we can go directly to a certain chain. And so I think we need to focus a lot more on this technology that we want to see. If you want to have Cosmos or whatever, it's actually one of the best places if you want to build something truly unique. And to Seb's point, that's true. We've seen some of the most at least innovative applications going there. going away from liquidity just because they can completely curate the whole technology and infrastructure. If you want liquidity, yeah, just go for another chain. You cannot like change things that much, but maybe, yeah, you have a lot more liquidity, a lot more users there. So yeah, definitely, I think it's more of like a VC game to talk about like chains and a bit of like the maxi thing. I'll focus a lot more like on the technology and
VCs love talking about chains.
yeah,
Much. It's like an obsession.
yeah, because so far that's where you made money, most of the money so far, and they still make money. The
Now
LP.
VCs talk about meme coins, you know. This is sort of maybe avoid investing in those, but no. Okay.
All right, I think our time is up. Thank you.
Thank you.
Thanks, guys.